As private markets are becoming large and important, it will also create platforms like these, and we are building a global platform in this space. Our customers include venture capital funds, private equity funds, investment banks, as well as M&A and innovation teams of large Fortune 500 corporations. Also, it's a global platform, so nearly 65% of our revenue is international, and we have customers in over 50 countries. I would like to begin by summarizing the financial performance for Q1 FY24. To set the context, we have one business, one legal entity. So you'll not see numbers like standalone or consolidated. All the numbers that I'll talk about is for the business overall. Revenue from operations for Q1 FY24 was 19.8 crores. This was an 8% year-on-year increase. Total income was 20.8 crores, which is an annualized run rate of 83.1 crores. Coming to profitability, EBITDA was positive 0.02 crores. Just to add, this EBITDA includes all the non-cash expenses also, like the ESOP expense. PAT for the same period was positive 0.7 crores. Moving on, the EBITDA margin was 0.1% and PAT margin was 3.5%. The business continued to generate positive free cash flow. The free cash flow for Q1 FY24 was 0.6 crores. Cash and cash equivalents stood at nearly 61.9 crores, which is an increase of 30% on an year-on-year basis, or an increase of 14.1 crore on an year-on-year basis. In the subsequent slides, I'll be covering each of the metrics we talked about in the summary in more detail, starting with revenue. So revenue from operations is essentially revenue from platform subscriptions. 100% of our revenue is subscription-based. There is no services or one-time implementation component. So it's a fairly high quality revenue. Also, please note that this is the accrued revenue. So though we do prepaid billing and collections, like most other financial data platforms, you may have seen, we only recognize revenue for the time duration falling within the reporting period for which the service was made available. Right? So as discussed, the revenue from operations in Q1 FY24 was 19.8 crores. This is an 8% year-on-year increase. The total income was 20.8 crore, which is an annualized run rate of 83.1 crore. This is a growth of 9% on a year-on-year basis. We've also added historical data for the last 3 financial years for reference here. EBITDA for Q1 FY24 was 0.02 crores. If you exclude the non-cash ESOP expense, this was 0.9 crores. On similar lines, PAT for Q1 FY24 was 0.7 crores. If you exclude the non-cash ESOP expense, then this was 1.6 crores. In terms of the margin, the EBITDA margin and PAT margin for Q1 FY24 were 0.1 and 3.5% respectively. If you see, the EBITDA and PAT have reduced marginally because the revenue from operations grew at 8% while the cost grew at slightly higher 9%. And in the subsequent slides, we'll also cover into more detail as to more details on this and also what we expect going forward. So one of the other metrics that we also track closely for the business is what part of the incremental revenue is going into the bottom line. And for the same reason that we mentioned on the previous slide, we did not see expansion in the bottom line because the revenue increase was offset by the increase in employee and other expenses. Right? In the previous year, it has been much higher. So in FY21 and FY22, it was close to 80%. In FY23, when we increased the average team size by 23%, this had reduced to 31%. Right? What do we expect going forward? So if you see on the cost side, the rate of increase has already come down from 16% last year to 9% this year. Right? So the incremental expense has already got eased. On the revenue side, we expect that it should go back to steady state soon. Right? So we expect that we should still see sort of bulk of revenue going into bottom line shortly. Coming to the expense, our total expense for Q1 FY24 was 19.8 crores. This is a 9% increase over Q1 of the previous financial year, that is Q1 FY23. If you see, this expense growth rate is lower than the CAGR that you see in the last 2 years. which is what we had indicated in the last quarter, if you remember. Right? So on the right-hand side of this slide, we have given the breakup of the expense into the key components. So the key components are the same as what you would have seen earlier. Just to summarize, first, bulk of the expense is team cost. So in Q1 FY24, it was 88% of the total expense. This has been in the same range across the last two financial years as well. In FY22 and 23, this was 89% and 88% respectively of the total expense. Also note, all our team is in-house, so there is no outsourced or contract workforce. The second largest item is cloud hosting cost, which accounted for 3.4% of the total expense, right? As we do a lot of data processing and analytics. This is followed by rental expense. The other interesting aspect is that we do not have a large paid marketing line item because we do not have a large paid marketing spend, neither digital marketing nor offline based, typically required for customer acquisition. The reason for this is that because we are a data company, we produce a lot of content and hence are able to use it to get a lot of organic traffic. Right? So we are able to acquire leads fairly efficiently, which is reflected in the expense breakup. Going deeper into the expense growth, if you see the year-on-year expense increase for the previous 2 quarters was higher of about 24% and 14% respectively. The increase for the whole of last financial year, FY23, was 16% on a year-on-year basis. We had indicated last quarter that this should get eased over the subsequent quarters, which is what you can see in the Q1 numbers also. So if you look at the year-on-year expense increase, that has got reduced to 9% in Q1 of the current financial year. On the right-hand side, we have given the details of the main drivers for this. Employee cost, which contributes to nearly 90% of the overall expense. Right, so we have given the average headcount across the last year and across the last 5 quarters. So if you see, the average headcount increased from 684 in FY22 to touching a peak of around 900 in the last quarter of FY23. This increase in headcount due to various growth initiatives undertaken last year. Right? In Q1, it came back to 825. Right? The headcount got optimized due to various automation as well as efficiency initiatives that we have taken across departments. The ending headcount was even lower of about 814. Moving to the revenue side, so I wanted to talk a little bit on the market. So if you see, the private markets have been very muted in the first half of this year. And I'm sure you would have seen some commentary on this in press. But just to put it into perspective about the deal activity among private market investors, right, what you see in numbers. So if you see the global tech funding, it was at a near 5-year low. Right? The global funding in the first half of 2023 was down 54% if you compare it to the same period last year. And this trend was similar in India. If you were to see, it was down 72% in the first half of the current calendar year as compared to the same period last year. This was even more stark in the later stage. So one proxy for the late stage activity is the number of new unicorn startups that get created, or the new private companies which got valued at over $1 billion. Right? So if you see the current run rate of new unicorns which got created globally, which is a proxy for the investment activity which is happening in the late stage. So this was the lowest that it has been in the last 9 years. Closer to home, like India, obviously, saw no new unicorns in the first half of 2023, which is down from a peak of about 44, what you saw, just in 2021, just 2 years back. Even if you look at M&A activity, it has been very muted. If you look at the M&A deal volume in the first half of 2023, it was the lowest in the last decade after 2020, which was the year of COVID onset. And even if you look at IB fee, which is the investment banking M&A advisory fee, it has been one of the lowest that everyone has seen in the last 10 years. So on the question of when is it expected to improve or bounce back, right? So typically we've seen that there's a lag of about 2 to 3 quarters between public tech and private tech. And with the public markets having recovered this year, it's likely to see some recover in the private tech also. So we expect that the market should improve in the next few months. Coming to some of the business metrics that we are seeing, we are seeing some green shoots. For instance, if you look at our deferred revenue, we have seen the downward trend reverse and a slight acceleration happen in Q1 of the current financial year. So we might have to still wait for the trend to unfold for another quarter, but there's some green shoots that we are seeing. One of the questions that people might have is that the customers may be doing lesser number of deals, right? Because there may be a temporary valuation mismatch which exists. So the valuation at which investors want to put in money and the valuation at which companies might have raised money in the previous rounds, right? But how actively are the customers sort of using the platform, or what is the engagement? So coming to that query, we also wanted to share some platform engagement matrices for people to see the trend. Obviously, this is some of the matrices that we track very closely for the business. So if you look at the platform engagement matrices, this actually looks very healthy, right? So despite the fact that the customer may be doing lesser number of deals than what they were doing the peak cycle of 2 years back, if you see the platform usage, which is here in terms of the number of exports and my analyst data queries which they have sent, right? So that number has nearly doubled across the last 2 years. So the engagement has increased both at the overall level as well as on a per user level, right? So this is a very healthy trend that we are seeing. Apart from these, we at our end have been investing heavily across various growth initiatives. We span across the go-to-market funnel of marketing, sales, account expansion. So we believe as the markets open up, we should see more acceleration in the new customer acquisition as well as the customer expansion. I'll also take a couple of minutes to recap some of the key growth initiatives we are aggressively working on, and I'm very excited to share the results that we are seeing from those. So one of the very interesting growth initiative that we had talked about previously is scaling of our organic traffic. So because we are a data company, we are able to use a lot of data that we own to launch large set of public pages, which generate a lot of customer traffic. For instance, someone is searching for fintech companies in Sweden or SaaS companies in California. They come across our pages and we are able to generate leads through that. So if you look at our organic search traffic, we got across all our pages 4.1 million traffic in Q1 of FY24. The current run rate is higher of more than 16 million annualized. So this is obviously a very high interesting number that has also increased, right? So there are 3 interesting things regarding this. So one is this is a very large traffic funnel that we've been able to build. Second, it has grown rapidly, as you can see across the last few quarters. For instance, the current run rate is more than double of what it was just 18 months back. Third, we continue to work aggressively on this and we expect it to increase even further. Another interesting growth initiative is press mentions. As we mentioned previously, whenever media talks about data for private companies or startups or emerging technology sectors, we want them to quote data from Tracxn. Bunch of recent initiatives like launching reports with media, data contributions, regular columns in some newspapers, etc., have resulted in multiple increase in press mentions that we've received across various respected media outlets. Advantage of press mention is that a lot of people discover our data for the first time through media, and then they come to our website and generate a very high intent lead. Also, we believe this goes a long way in building a brand as a data company and also helps our sales conversions and hence our revenue growth. Another interesting growth initiative that we have mentioned about on the data side is that we are expanding coverage in financials and cap table data sets of private companies on the platform. For context, today we cover financials across over 15 countries and cap tables across over 10 countries. These data sets are particularly in high demand by certain customer segments like private equity and investment banks, among others. For illustration, an investor wants to scan an upcoming space like a single specialty hospital chain or a D2C direct-to-consumer brand, internet-first brand in a particular country. So in addition to the set of interesting companies and market landscape, they would also like to find out the companies which have cross a particular revenue threshold, say like more than 50 crores, etc. Since now we generate sufficient cash, we can invest across increasing the throughput of these data production engines. So we believe this will help us accelerate revenue growth in future, particularly in customer segments of private equity and investment banks. Moving on to some of the other financial matrices, the company generated positive free cash flow of 0.6 crores in Q1 FY24. If you see, this is a decrease over Q1 of last financial year. So interestingly, if you compare across these periods, both the revenue and collections have increased. So the revenue increased by 8%, the collections increased by 10% on an year-on-year basis. But the free cash flow is lower if you compare across these 2 quarters because of increased employee rent and other expenses. That rate of expense increase has anyways come down, as we talked about in the previous slide. So it should go back to an increasing trend soon. The cash and cash equivalent stood at 61.9 crores, so slightly less than 62 crores, an increase of 14 crore on year-on-year basis, or a 30% increase on an year-on-year basis. So interestingly, despite these investments in various growth initiatives, the company generated increasing free cash flow and also increased cash and cash equivalent, both on a year-on-year basis as well as on a sequential Q-on-Q basis. In the subsequent slides, we have covered some of the other KPIs for the business. On the first slide, we covered the number of customer accounts, number of user accounts. We closed June 23 at 1236 accounts and 3,464 users. These are 9% and 6% growth on a year-on-year basis, respectively. Please note, in terms of the number of users, we had done some tightening, as we had mentioned earlier, in terms of some non-paying users of paid accounts, which had reduced the number of users but did not have any impact on revenue. In fact, we hope to have more expansion through these, as some of the accounts would buy more licenses due to this. In terms of some of the other KPIs, the contract price or invoicing amount for Q1 FY24 was 21.4 crores, which is a 13% increase on a year-on-year basis. The last graph talks about the entities profile, which is a proxy to the amount of data added to the platform. So today we track more than 2.3 million profiles, including private company, private market companies, funds, etc., globally. In terms of some of the other interesting characteristics of the business, 66% of the revenue for Q1 FY24 was from outside India. This has been almost in the same range across the last 3 financial years, which we have added below. These customers span over 50 countries. The top 5 countries within this show similar spread to where you have the large corporates as well as private market investors. Right? So the top 5 countries for us by number of customer accounts are India, US, Singapore, Germany, and UK. Additionally, we have a diverse and a rich customer base across the investment industry, which includes venture capital funds, private equity funds, investment banks, as well as corporates across M&A team, innovation team, and others including government agencies, universities. So this gives us a large addressable market to tap into. So this covers most of the key updates from the recent period. In the subsequent slides, we cover the business overview. I'll skip going over these slides, but please feel free to check out offline. Subsequently, we have also given some slides on the detailed financial statements, which people can go through for more details. Right? So thanks. That's all the key items I wanted to share. I'll pass it back to Siddharth for any Q&A that the group might have.
Yeah, thank you, Neha. It was a very comprehensive presentation. And now we can move on to the Q&A. So, participants can unmute themselves and ask their question, and we'll be doing the moderation from here. So do I see any hands raised? Just one second. Anybody raising his hands? Participant can raise their hands and, and then we'll just call out the names.
Yeah, maybe 4 people who have raised hands.
Yeah, okay. Fine. I'm not able to see any raised hands actually.
Maybe the
Ashwini.
Okay.
Yeah.
Ashwini.
So, Ashwini, would you like to ask your question? Yeah.
Yeah, can you hear me?
If you could
Yes.
be a little louder. Yeah, sure.
Yeah. So, Neha, my question is that, you've cut down your headcount from 900 to 815 over the last couple of quarters. And I'm wondering if the pressure of reporting profits of being a listed entity is driving this headcount cut because and I wonder if you're compromising on your long-term growth prospects. So that's question number one. And I know you spoke about automation and efficiency and so on, but the point that I'm trying to make is that at this age, at this stage of your evolution, cut the fat, don't cut the muscle. And I'd love to hear as to how you think about it. So that's one. And number two is that obviously you rightly pointed out that the private equity markets are weak or are in a lull, and that's kind of hurting your business. And I'm wondering that, I'm sure you're thinking about this as well. Is there something that you can provide as an incentive for public market investors to kind of become interested in your platform? So those are the two questions that I have.
Thanks, Ashwini. So just coming to the first point, which is basically the headcount cut. So if you see, the departments, primarily that we had increased the headcount last year. So there were 2 key departments. One was the sales, and the other one was the data operations. And if you see the efficiency which had also come in, or the slight reduction which should also come in, is across these 2 departments. So for us, it was not a cost-driven decision. So for the sales, it's actually very measurable. So whenever you do bulk hiring, there's a little bit of optimization happens because not everyone is able to become productive. On the data side, we continue to do a lot of interesting sort of efficiency initiatives. So that has been constantly happening. So there's a lot of automation which keeps happening. The output actually increases, but essentially for every module, whenever we launch, typically, for instance, global transaction is one module, or cap tables across 10 different countries, another module. What we see is that incrementally the number of people that we require for each department, once the efficiency kicks in, it reduces over time. So for us, so this has not been driven by cost at all, because we continue to, if you see, we continue to increase the cash and cash equivalent across all the quarters. So for us, it was primarily just driven by the efficiency, the initiatives which were sort of bound to happen. On the growth side, we continue to sort of be very aggressively sort of investing across the whole the funnel. So for instance, marketing, you see a lot of results, just in the last 18 months, for instance, our traffic has nearly doubled, right? So that gives us a lot more leads. We have been doing so there is some interesting also initiatives being done in expansion, which you will probably see results in some time. So on the growth side, we've been fairly aggressive, and we continue to sort of invest. And it is about us tracking all these initiatives, and it has not been for us, it has not been like we are optimizing. I think we continue to be fairly aggressive because we continue to sort of generate cash. right? So hope that answers the first question.
Yeah.
Okay. On the second part, which is, if you're seeing sort of lull in the private markets, can we do anything for the public? So on the private market itself, we think that, it's a very large segment it has become. Like if you look at typical LP, for most large LPs also, it is between 10 to 15% of their allocation. Right, so it has become a very large asset class, and we believe this is just a temporary phase. And if you see investors, they're still sitting on a lot of dry powder. So they are probably going slow because they're seeing some valuation correction. They want that to happen, but they're still sitting on a lot of dry powder. So we see a lot of depth in sort of continuing to do this. There are a few segments that we are going behind, which is using the existing private market data itself. So, for instance, sales and marketing is one particular large customer segment. Anyone who's looking to cater to the private companies as a customer segment, that is one. Second is limited partner is a large segment. So for instance, we have fund performance data, which is very relevant for them. That's another segment that we are going behind. Product discovery is another segment which people pay money for. Like we work with a lot of corporate innovation teams. So these are three segments which we are going behind using the existing private market data, which we already have some customers, and over time we can go more deeper into this. So that's on the private market. On the public market also, we have seen some use cases. Like for instance, if people want to see the private comms within that, or like we have some data like your employee count trend, which you can actually get it for public companies also. But there'll be small modules which we may go into. But we think that the private market itself is fairly deep.
Okay. Thank you, Neha. All the best.
Thanks.
Yeah, thank you. Thank you, Ashwini. We'll move on to Mihir now. Mihir, would you like to unmute yourself and ask a question? Yeah, right.
Yeah. Am I audible now?
Slightly louder.
Am I audible now?
Perfect. Loud and clear.
Sure. Yeah, thanks for giving the opportunity and thanks for the presentation, Neha. Largely wanted to understand, the business model. What is the business model on the basis of charging? How do we charge the business? I'm tracking this company on a fairly new basis. So just wanted to get an understanding around that. What is our charging model, which is there? My second question was just on the growth initiatives. When we see the private market is in a slightly lull period, despite that, our revenue is holding up, our business is holding up. So just wanted to get an understanding which are some of the initiatives, some of the specific initiatives on the GTM strategy. How does our GTM strategy work? How do we target customers? I just wanted to get an understanding around that. And just a third question was on the aspiration side. Is there any aspirational number that we are looking over the next 2 to 3 years, or maybe let's say next 4 to 5 years, that the business to become both to the revenue side and the profit side? Just an aspirational understanding. So just wanted to get an understanding around that. Yeah, that's it from my side. Thank you very much.
Sure. Thanks, Mihir. So I'll just take 3 of these questions. So for the first one was on business model. So what's our business model and pricing? So that is fairly standard. Like most financial data platforms that you see, it's subscription based. So 100% of our revenue is subscription based. We have prepaid billing. So we collect cash upfront and we do invoicing upfront for the entire subscription period. But we recognize in the revenue, as a subscription as the time sort of happens. Right, so that is on the business model. The pricing is also fairly standard. So typically, we have user-based pricing. So just like you would have seen some of the public market data companies, we have a user-based pricing. So typically, on an average, an account buys 3 users. The realized and it's also given on our website. The pricing that's fairly standard. Based on the number of users that you want to buy, you have a pricing that you subscribe to. Our realized pricing per account is about 6.5 lakhs per year. Our realized pricing per user is about 2.4 lakhs per year, right? So which corresponds to about 3 users on an average per account. Obviously, there's a whole range, right? So we have customers paying us nearly 1 crore as well, which is, and we have increased organically based on the number of licenses that we've been able to sell. Right, so that hopefully that answers the first question, which is what is the business model, right? The second thing is on the growth initiative. So, as I was mentioning, like if you see, in our 10-year journey, for the first 5-6 years, we obviously spent disproportional resources, in building the technology platform, data, etc. Right, because we have global data, a massive amount of data that we process. The recent 2 to 3 years, we've been investing aggressively on the various GTM initiatives, which includes your marketing, across sales. Some of the initiatives to talk about is, for instance, the whole marketing funnel, like the whole leads expansion that has happened in the last, couple of years. We have increased our organic traffic multiple fold. Today, we get traffic of run rate of more than 16 million annualized, right, which is a huge funnel that we've been able to build. This is one interesting initiative on the marketing side. The second side is on the sales. So we have sales team that cover all the time zones. So last year we had scaled the sales team, right? So this is another initiative that we worked upon. The third is we are doing a lot of work in expansion as well, right? So you saw some of the user tightening that we did, which also helps us in expansion throughout the accounts, right? So you'll see probably some results also happening over there. In the last quarter, we had talked about the difference between expansion and the revenue from expansion as well as revenue from new customers. So if you see, the slowdown which has happened has impacted the first part, which is the expansion. So in the year that we grew more than 40%, the expansion was 115%. Last year, for instance, it was closer to 103%, right? But the new customer acquisition actually continues to improve, right? So I think new customer acquisition last year was 13 crore, which is higher than previous year, right? Wherein we grew more than 40%. So these are some of the things that you see on the GTM side, right? And coming to the third question, I think in terms of the aspiration number, so I think two things that we probably see, like, obviously we have an internal target of, where we want to have the bottom line in the next 5 years. And, growth, I think we should see that number going back to the steady state of, if you see historically, we have grown at 30%. It should probably go back, soon to that. Hopefully that answers the question, Mihir.
Sure. Yeah, that's really helpful. Yeah, thank you very much, and best of luck for the business.
Thanks.
Thank you. Yeah, thank you, Mihir. We move on to Madhur now. Madhur, would you kindly unmute yourself and ask your question? Yeah, Madhur, you can unmute yourself and ask your question.
Hi. Good evening. Thank you for the opportunity. I have a few questions. What will be our employees that are like percentage of employees that are into content creation and like the content that we produce on our website through which we are gaining traffic? Other question would be, who are our competitors and how are we different from our competitors? Because when I see the market, there is PitchBook, Crunchbase, all these data providers. So how are we different from them? I'll ask my next question afterwards. If you could answer me right now, these two.
Sure. So coming to the first question, which is how many people are engaged in content creation for the website. So actually there you don't have any people because you already have a lot of content which is created on the platform. So we are able to use that for getting all these traffic. So the 16 million number, of traffic that you see, that we had talked about in the presentation. So that is, there's no additional, there's obviously a tech team which sort of works to optimize it and to do that, but there's no additional team which sort of produces content specifically for that. It's basically the content which we have anyways produced in the on the platform, right? Just to answer, probably address one other part of the question, if you mean to say what is the split that we have across the departments. So if you see, we ended last quarter at a headcount of about 814 people. If you see how that's split across the key departments, so one is you have product and technology, which is involved in building the product, etc., the tech platform, that is about 95 people. Then the second large bucket is your analyst and data operations, which is about 420 people. The third is your GTM team, which includes your sales, marketing, customer success, which is about 230 people, right? And then you have business support, which is nearly slightly less than 70 people. Okay? So hopefully that answers the first question, which is on, how many people are sort of involved across these functions. Coming to the second question, which is how different you are. See, in every every market you will have competitors. In our market, in fact, because we are in a vertical industry, the number of competitors are very limited. Like globally, we only have about 5 or 6 players which are in the private market data space, which you'll probably see for a lot of other vertical industry as well, right? And currently, the offering is sort of fairly differentiated. So it is not, unlike a very commoditized software wherein you're comparing feature to feature. Currently, there is fair amount of differentiation which exists across the offering, across all these players, right? So typically, we have to sell the product in isolation. So we have to sell based on the things that we have built, and it's not so much that you're comparing. The customers are comparing feature by feature. So hopefully that answers the question on the second part.
Like asking you on the second part. So are we cost efficient for the customers, or do we provide some additional data like more number of markets, or we are focused on Indian markets? So how are we differentiating? So my question is on that. Are we cost efficient, or are we providing some different like differentiated product? Yeah.
Right. So it's not that it's cost. So if you were to divide this market, it would probably be in 3 bands, which is the low cost products which are there. There are mid price point products which are between $400 to $500 per user per year, and then you have high price point products. So we actually fall in the mid price point, which is about $500 per user per year per month pricing, right? So, or about $6,000 per user per year pricing, right? So that is a mid-price point that we have. The second part coming to, so there is fairly differentiated amount of data that exists on the private market. So for instance, someone wants cap tables, someone wants to look at different sectors. So there they are not able to find it any other platform. So there's fair amount of differentiated data that exists. And coming to the third point, our data is actually, our coverage, if you were to see, it's global. So 70% of our revenue is international, and typically the customers are looking at local data through the platform. Because if you see, private markets are typically focused on different regions, right? So if we are working with a UK-based investor, they're typically looking at UK-based data through the platform. Okay? So hopefully that answers the question, Madhu.
Yeah, thank you. And what will be our ESOP like share dilution going forward, like in next 2 to 3 years that we hope on doing, and what kind of ESOP cost, like share dilution would something on share dilution would work? And the second thing is, I'm not understanding, like when we are telling that our free cash flow was reduced, but we are telling that that was because of employee cost increase, but employee cost has increased because of ESOP expenses. So if you could just help me understand that, that would be very helpful. Thank you.
Sure. So if you look at the ESOP cost, that has been fairly range bound, across the last year. So last year, for instance, it was 5.4 crores, which is about 8% of the total employee cost. And we have said that, you can expect it to be in the same range because we don't give bonuses. This is part of your appraisal process. So, and there's no one-time bulk grant that we do. So the ESOP cost is part of your compensation, and we expect it to be in the same range. So last year it was 5.4 crores. This year we also expect it in the same range of about between 5 to 6 crores, right? So that is on the ESOP cost. And on the free cash flow, so the employee expense, if you were to see, last year had increased by 16%, right? So it's not just on ESOP cost. I think that was a very small portion. It was probably on the overall expense increase.
Okay, thank you. So 8% of the employee salary would go to ESOP cost, like something that in that kind of range, right?
Yeah, it has been in the same range if you were to see of what is the ESOP cost as a percentage of overall employee cost.
And the same will be going forward.
Yeah.
Okay,
yes,
thank
you can
you.
expect into the same range.
Thank you and all the best.
Thanks.
Yeah, thank you. We move on to Sameer Dosani. Sameer, if you could kindly unmute yourself and ask your question.
Yeah, can you hear me?
Yeah, loud and clear. Thank you.
Yeah, so thanks for the opportunity. So, if you look at our own contracts, so do we have some annual increments factored in our contracts when we go for renewal of these users? That is my first question. Second, on the ESOP, did you say this is one of the higher? I mean, should we think ESOP cost will remain at this because it has reduced over last few quarters? Now, should we consider this as a new normal, or it will rebound in that sense going forward?
Right. Sure. Thanks, Amir, for the question. So on the first part, which is, on the contract. So in the contract, we currently do not have the price increase. We have done price increase in the past. It's not a regular thing. More importantly, the way we are able to grow accounts. So if you see last quarter, we had talked about the fact how many accounts are in the different price buckets. For instance, how many accounts are paying us more than 20 lakh, more than 30 lakh, more than 40 lakh. And if you see the number of accounts, across all these three buckets had increased, right? So we are able to realize more from a lot of customers. Our way of increasing the realized pricing across the customer has been currently by increasing by the number of seats, right? So if you look at on an average, the account buys 3 seats, but if you look at our largest paying customers, we have been able to sell more than 35 seats as well, right? So there's a lot of room to grow within the existing accounts based on by selling to more number of users within the accounts, and we see a lot of headroom for growth within that, right? So that has been one of our key strategies, and we continue to do a lot of work in terms of that as well. So that is on the first part, which is, the annual increments. Hope that answers the question, Sami.
Yeah, thanks.
Okay. And on the second part is the ESOP cost, right? So the ESOP cost is slightly lesser, but you can expect it to be in the same range for this financial year. So for instance, if you were to see last year, it was 5.4 crores, which is about 8% of the total employee cost of that year. And you can think about ESOP as, so we don't have bonuses, for instance, we give ESOP as a part of the appraisal, and it's very formula driven. So based on your salary, you have, predetermined, that range of ESOP. So you can expect it to be in the same percentage also going forward, which is, about 8% or plus and minus of the total employee cost, or between 5 to 6 crores, right, for this whole financial year.
Understood. Yeah. And lastly, I think you've launched the limited partner module, or we have actually started selling to them, which is our newer initiative. So can you share some progress? How has the funnel built up? Are we seeing some success, and what is the kind of opportunity size that can come out of this new initiative? Thanks.
Right. So I would say that, so when we speak to a lot of customers, a lot of them actually say that, like when you're working with limited partners, a lot. So for instance, we have fund performance data, which they find it very relevant, because the transparency that you have across the performance, just like in the public markets, you are able to have a very transparent view of performance, across mutual funds, for instance. In private markets, across all the AIFs, though you have the data, there is no one place wherein you can actually get
Correct.
what is the performance which has been there. And, so there actually the data is available because the underlying company data is also available, right? So you have that view that is available. And we've also sort of worked with some of the customers to actually see that, they find it very useful. In terms of the opportunity size, we think it's a sizable one. We haven't sized it, but that's a large segment, and that's a fairly cash-rich segment, right? Which finds this data interesting. So it's probably early days, and we're still working with a few customers to sort of increase more in that.
Okay. So we have already sold it for some time, right? I think 3 to 6 months we have already done this initiative, started selling. So what has the progress been? Is it
no, I would say we
accepted?
have the data, but we haven't sold specifically for these.
Okay.
We have some people
great.
but we haven't sold. Yeah.
So that opportunity will kick in sometime.
Yes.
All right.
Yes.
And if I okay, all right. That's it from my side for now. Thanks. All the
Thanks,
best.
Samir.
Yeah, thank you, Samir. Our next question is from Bhargav Buddhadev. Bhargav, if you could kindly unmute yourself and ask your question.
Yeah, good evening. Am I audible?
Yeah.
Yeah. So my first question is, if you look at slide number 18, it says that there is a 20x increase in 3 years in organic search traffic. However, if we juxtapose this to the number of user CAGR, it's at about 20% over the last 3 years. So, just curious if this organic search traffic data point is relevant in our context.
Yeah. Yeah, so just to that, actually, no, this is very relevant because these are the set of, this is sort of your top of the funnel customers that you are sort of educating them about the content. They're seeing your content, they're clicking on it. So that is fairly relevant. The way it translates is primarily into new customer acquisition. So there is a funnel, out of the number of people that come to your traffic, a percentage generate lead, a percentage come to demo and then convert, and that is basically the funnel for your sales team and your new customer acquisition. So if you see the new customer acquisition, even last year, when it had increased over 2021. Right. So we had, like last quarter, we had given the breakup of the new customer acquisition. So that funnel has actually increased despite the market being slow, despite, overall a lot of matrices, overall, sentiment being lesser or people doing much lesser number of deals. The total accrued revenue that we had got from new customers last year was 13 crore versus about 12 crore in the previous year. Right. And this is just the accrued revenue. There's obviously a pipeline that you also build. So that is very relevant, and this actually directly translates to the number of demos that your sales team is working on, the number of leads that your sales team is working on, and the pipeline that you're building for the new customers. Right? Hopefully that answers the first question. And obviously the second part is that we will see we'll see probably more impact of this also going forward. So despite the market being slow, the new customers that we've been able to acquire has been increasing.
Secondly, is it possible to highlight how do we measure our sales productivity? And is there any quantitative metric that we apply? Because as highlighted earlier, clearly it seems like our product is very, very strong, but we are still lacking on the ability to convert that into sort of revenues. So clearly, a lot of room for improvement on the sales side. So just wanted to understand this bit more carefully.
Sure. So on the sales productivity, so this is something that we track very closely. The way we track it is in terms of the number of closures that a person does. So once they come on board, within a quarter, how many new closures that productive person is able to do. Within the team, we have, across the 130 member team that we have split into people that are doing closing, as well as there are people that supports to build the demo or to build context on the demo, to qualify the leads, etc. So we measure the efficiency of the closing people based on the number of closures that they are able to do. The way you can see the sales efficiency, for instance, one way is if you look at the total cost of the sales team and the total new revenue that we acquire, that can be one handy metric that can be seen for the sales efficiency. So, for instance, if you look at a 130 member team, approximately, and if you take the average salary of the entire org, which is about 8 lakh, right? So that is about 12 crore, right? And if you see the new revenue that we had acquired last year was 13 crore. This is just the accrued last year, right? So the sales team is essentially responsible for getting in the new revenue and the new customers. So if you were to see, they actually got more revenue, for the whole year, just accrued in the first year itself. Right. So by efficiency, it's fairly, it's still fairly efficient if you were to see in terms of the expense and in terms of the new revenue acquired.
Just a feedback, if you can share some data point on your sales productivity front in the presentation, that would be very helpful in terms of headcount or maybe the other productivity parameters you mentioned going forward. So it will allow us to just sort of track that as well. And lastly, if I look at your employee cost on a Q-on-Q basis, despite a reduction in headcount, the employee cost hasn't declined a lot. So just wanted to have some clarification on this. And related question is, given that this is a funding winter, obviously a lot of good talent may be available, especially on the sales side. So have we done any sort of hiring on the lateral front to sort of further boost up the team? That's my last question.
Right.
Thank you.
Thanks, Bhargav. So on the first question of the employee expense, so that is correct. That if you were to see the headcount, that is reduced by 7%, but the employee cost, if you see on a sequential quarter on quarter, that is reduced by about 1.3%. That is primarily because of two reasons. One is obviously the timing which is there. The second is that the team which got sort of where the efficiency sort of came in. So if you were to see also in terms of the team split, the efficiency was also there in the data operations team, which is typically lower than the average, right? So that is why you see a difference in terms of slightly lesser sort of cost reduction, but versus the headcount reduction that you were to see. Right? So hopefully that answers the first question. And on the second question, which is yes, funding winter, and obviously there's good talent which is available. So yes, that is something that we are doing. I think in sales, a couple of the things that we are sort of also doing is so we are doing some lateral hirings. We have people, a lot of our senior leadership have grown through promotions. But we are also doing some lateral hirings in sales, as well as we are doing hirings for language-based sales team as well. So what we realized is we have customers in a lot of non-English countries as well, wherein sometimes in the demos people used to get translators, right? So it is better that you may have some people who understands the local language. So for a few large countries like Japan and a few other ones, wherein we already have sort of customer base, we are also hiring some people who have already sold to that region and also understand that language. Right? So hopefully that answers the question.
Yeah, thank you very much. And just the last question, sorry to stress this a bit. Is there a thought to sort of spend on promotions to boost up the user account, or we will not engage into that in the near term?
So currently, so coming to that question, so currently there are a lot of initiatives which are going on for us to increase the number of users that we are reaching out across various channels. So some of the few ones that we talked about is obviously organic. Whenever you're searching for a relevant content, we should ideally be present. That is one. The second is a press mention. Whenever there's a mention, about a particular sector, like we're doing across different regions as well, people should come across, people should hear our brand and they should generate lead. There are also interesting initiatives that we are doing, across the universities, because we see that that is another channel for us to acquire customers. So for us, we are actually doing a lot of these ones. For us, it's not, it's not so much paid marketing, but I would say these channels are sort of working very well for us, and we see a lot more depth in all these as well.
Okay, thank you very much for the opportunity and all the best.
Thanks.
Thank you, Bhargav. We have Amit Chandra next. Amit, if you could kindly unmute yourself and ask your question. Yeah.
Sales through. Yeah, hi, and thanks for the opportunity. I know my first question is, obviously, on the organic traffic that we have seen that it has grown significantly, and it leads to more inbound leads. But if you can, throw some more light on what has been the closure to demo ratio, and in terms of what has been impacted, because this is not showing up in terms of our growth numbers. So is it the number of demos have come down, or the closure ratios have come down?
Sure. Thanks, Amit. So from the organic traffic, there is a whole funnel, right? So from the number of people that generate the leads, to the number of people that come to the pages, to the number of people that generate the lead, to number of demos that we able to do, and then the closure that we have been able to sort of see, right? So this is the whole funnel, and that has actually increased. The way the reason why you are not able to see that in numbers is because the number is on an aggregate basis, wherein you see the impact of both expansion as well as new customer acquisition. So for instance, last quarter, we had actually given that split of the increase in revenue across these two components of expansion from existing customers and the revenue from new customers. So if you actually see, like the last year or last quarter where we had seen the revenue from new customer had actually increased, right? The thing that you see is blended, right? So because the market is a bit slow, there's pressure on expansion, right? So the expansion had come down from like a 115% previous year to like 103%, right? So that is the reduction, and the reason why you don't see exactly because you see a blended number. But last year last quarter when we had actually shown you the split, you could actually see that the new customer acquisition has actually increased, right? So that's a very healthy trend because these are all the customers that you're also sort of building, that you can expand further, right? So hopefully that answers, your question. But all this organic traffic that continues to sort of increase the number of demos and the customers that we are able to sort of reach out to.
Okay, and also Neha, in terms of you mentioned that you aim to increase the users per customer accounts, but if I'm seeing that has been coming down, so obviously that has been due to like tightening of logins. But what initiatives are we doing to mine our existing big accounts? So if you can share some initiatives there, and also uh, if you can share some views on what we are doing in terms of Gen AI offerings, because that is the future forward. So are we having some offerings there, or is our existing database already offering that? And if we offer that, then is there any incremental cost that we can see to integrate that?
Sure, thanks, Amit. So on the first question, which is on the number of users that we are increasing, so there, there are a lot of initiatives, and you'll probably see the impact of this, also going forward. So there are a lot of things that are going on in expansion. Like, for instance, if you look at the GTM funnel, marketing was the first thing, sales was the second thing, third is basically expansion from the customers. There's a lot of scope that we see in terms of growth within the existing customers. Quite a few of the things that we are doing is, for instance, just better education is one thing that we are working on. So for instance, having better onboarding. Second is that we are seeing, visiting customer offices. That is interesting. So whenever you're visiting a customer office, you are typically able to interact with more of the team members, and you're able to get the product familiar with more of the team members. That's the second thing that has been working. The third thing is that we actually, so this is another very interesting thing, but in between, for instance, we actually give out a few free logins. Like for instance, if someone has purchased a set of logins, we probably give out say 1 or 2 logins to more of the team members so that they get more familiar with the platform. And then when we have the next upgrade cycle, then we already have 1 or 2 accounts that we can actually go to upgrade. This is the third thing that is working very well. The fourth thing, which is also working very well, is actually tracking your login sharing. So, as you can, because we are a tech platform, we can actually track very easily if it is being shared with more than one location. A lot of our upgrades is also happening there. Then we realize that, it's being shared with more of the team members. So we actually reach out to them. In a lot of cases, they are also able to sort of expand. So these are the things that are actually working sort of very well for the expansion for us. So hopefully that answers the question, or the first part of the question. Right? Yeah. On the coming to the second part, which is on the Gen AI offering. So there are 2 ways in which we are applying sort of Gen AI. So one is on the front end side, which is the way customers are using it. So for instance, like one of the things that it has changed is people want to see the answer. People want to also have like in addition to being able to search the database, you also want to have like a chatbot to get the answers. So this is one thing that we're working on the front end. So that will probably take some time, but there are interesting sort of early results on that. That is something that we'll make live for the customers. On the second part is there are a lot of work going on the back end, which I would say bringing in efficiency. So for instance, today we track filings across many non-English languages, right? There are a lot of interpretation that we do. All these teams across the data and the analyst, they're also using various platforms and various infrastructure which is available for Gen AI to make their modules more efficient. This will probably, the way it will translate into PNL is probably cost efficiency and more a higher throughput in terms of output. So this is a set of multiple projects that are going on across the departments. Right. So hopefully that answers the question.
Yeah. Thank you, Nia.